After a sluggish 2025, Canada's real estate market is on shaky ground, and what you get depends on where you are.
We're expecting a 5.1% increase in sales in 2026, so not a huge increase.
Over the past year, prices have climbed in more affordable cities, up almost 7% in Regina, nearly 10% in St. John's, about 17% in Quebec City. But in big, expensive cities, the slowdown has been sharp, with prices falling 4.5% in Vancouver and more than 6% in Toronto. And with the average single-family home in those markets holding above $1 million, it's still a tough sell.
You can have a lot of first-time buyers come off the sidelines, but if all that's out there for them to buy is either too small or too expensive, you're going to have a problem.
Economists point to tariffs and a tough job market making many Canadians extra cautious.
Our view remains that there's going to be a gradual recovery, but we're not talking double-digit like pop in activity or anything.
That is the CBC's Nisha Patel. And as you heard, many parts of Canada are seeing a tide change in the real estate market. The average home price, for example, in cities where I don't live, like Toronto and Vancouver, have hit 5-year lows. The Greater Toronto Area has an average selling price that fell 6.5% to under $1 million from the year before, for example. And while the home price in Vancouver is still in the 7-figure range, it also dropped 5.7% to $1.1 million since January of 2025. But that's not here, where you might live as well. The story in Winnipeg is different. You're listening to This is Manitoba, and I am Marcy Marcusa. This week, we're taking a look at the real estate market in Winnipeg and how it compares to the national perspective and what it all means for buyers and sellers in the year ahead. So last month, numbers from the Manitoba listing service put the average price for a residential detached home at just over $430,000. That might sound like a lot better than a comparison to those big city numbers I mentioned in Vancouver or Toronto. But it's worth noting that it's a lot higher than it used to be, even in, say, 2020, when the average was $338,000. So the latest numbers from this year are the continuation of a trend, where the going rates for condos and detached homes in our province has increased. I spoke to Michael Fraze about it. He's the president of the Winnipeg Real Estate Board in July. Now, that's when housing prices in the city were setting new records. He started off by explaining some of what's behind the spike in the purchase price.
We've had a supply issue for a number of years, since the pandemic, and we still have this pandemic hangover with supply. But the difference is with us and some of the major other markets in Canada this year is they had demand fall off. Like Toronto, Vancouver had sales plummeted this year. Now they're oversupplied and they're starting to rebound, where we've had the complete opposite effect. Our demand has remained strong. Even at the end of 2024 into 2025, we've had strong demand throughout the year. Every month has pretty much outpaced last year. So it's this demand that is outweighing the supply that's really pushing these prices upwards. What that does is it just creates a seller's market. In many local neighborhoods, we're under a month of inventory, which means there's not enough housing supply. 1 month of inventory is very low. A balanced market, buyer's market, seller's market, balanced market is usually between 3 to 5 months of inventory. And we're sitting in some neighborhoods under 1 month, which means there's just weeks of inventory. And so that just creates a hyper-competitive market, which I know a lot of buyers, especially the first-timers looking to get in, are experiencing and have experienced this year. And that does put an upward pressure on prices.
Where are the hottest neighborhoods where you're finding that 1 month?
If you're in, neighborhoods that are close to that average sale price, so like Windsor Park, East Kildonan, Westwood, those are, Crestview, those are definitely really, really busy markets right now. And there's just far too few homes on the market in those neighborhoods.
Who's shopping? Who are the buyers in Winnipeg? Is there everybody, but
everybody,
is there who are the buyers that might be struggling to find an affordable home right now?
Well, those buyers in that entry level, that's certainly under $500,000 is the toughest market that we have right now. You do have, as you kind of go up in the price point, there's still definitely, we still see some luxury homes selling over list price with hundreds of thousands and multiple offers, even in the luxury market right now. But generally speaking, there are some pockets that are you have a little bit more room to breathe. Some areas like Sage Creek and Bridgewater, as an example, those ones have a lot of new inventory. bit of a higher price point. So there's a bit more room to move around. It's kind of like going from a hot tub into a swimming pool. You have a bit more room. But those neighborhoods for sure in the as I mentioned, that are hovering around that average sale price are the busiest and the most competitive.
Why haven't we fallen off here? You were talking about other cities where there was a change and it didn't happen here.
Yeah, so Manitoba and Winnipeg, what we have is a unique economy here. So there's a number of things that are going for us which really help boon demand. The first one is, first of all, our affordability, right? Even though these are record prices, we are about half of the national average for homes. So affordability is certainly driving it. We have an economy that has grown. We've kind of withstood and been resilient through this whole tariff and uncertainty of 2025. And our unemployment rate is actually below the national average as well. So you have, and population is also increasing. So you have more people in Manitoba. Our population is growing. Low unemployment. So you have people with jobs. That is going to be with stable interest rates. That's a perfect setting for housing.
Yeah, we're just different. We've always been different, quite frankly.
We've just bucked those trends, right?
Yeah.
We just don't have those massive volatile swings that some of those other major markets do.
If sellers are out there, what do you say to them right now about this, given the market?
Yeah, first of all, don't read the national headlines, right? Those ones don't apply to us. So a seller right now is typically speaking in a good position. It is a seller's market, but every market is local, and even beyond that, it's hyper local. There's submarkets within submarkets. There's different streets. On one side of the street is different than the other side of the street, or across the tracks. So making sure you get local knowledge, making sure you get a local realtor who knows the ins and outs of that neighborhood, and with a proper pricing strategy, a seller is set up well.
July's average prices for residential detached homes and condos also continued the trend of the highest monthly average prices on record, which, condos also is a totally different part of the picture. But I should just ask you, how different is it? Or is what you're talking about is on the houses the same for condos in Winnipeg?
Yeah, condos is kind of a spillover effect almost, because with our Winnipeg is over 70-75% of our sales are residential detached. We are a single family home community, right? That's just kind of where we are, as opposed to, again, Toronto, which is condo. Yep. So what that means is as the single family market was uber competitive, a lot of people look for alternative housing options, right? It's better to be a have than a have not almost. And so, okay, if I'm not going to get a residential home, I can go into a condo. And condos, even though we did see multiple offers in condos this year, it's fewer and far between. The intensity is died down for condos. So people can go into a condo, have a much more, less manic of a purchasing process. They have a cooling off period. You can kind of approach it a little bit differently. And we just don't have, again, the same sort of supply issues. Condos, we have new development. We have new condos coming to market. But it is, it's another good choice for people right now.
So we're now seeing more infill. Yeah. We're told by the city that we need more, we need more density and such, from their point of view. So where does infill fit into this? Does it take away, some of those where two, median market single family homes would be, and then put, like in some cases, put up that multi-dwelling? And how does that affect the market trends? Yeah,
infill is a good news story here, because what it does is it offers, again, more alternative housing types for buyers, especially first timers, because a lot of the infills now, they are looking at going with a duplex or granny suites, which is kind of a new thing for the city to start allowing more of those and easier to build them. When that just helps a first time buyer's purchasing power if they can offset their debt servicing ratio with income from a rental suite. So it's a good news story, and more infill is needed. I apologize if this is a crass analogy, okay. But somebody equated it to somebody has to come and scrape the roadkill off the road, and so there are underdeveloped housing. There are underdeveloped neighborhoods that need an influx of cash, an influx of capital to improve them, and that's where infill housing really helps.
Well, with their rising prices and the nationwide cost of living crisis that's been making headlines and likely affecting your family for years now, there are concerns about what it all means for what's really been a rite of passage for Canadians. I'm talking about buying your first home, getting on that housing ladder early on, and then selling it and upsizing if you choose to grow your family. For many people in Canada, that first rung of the ladder is now out of reach. Mike Moffat is an economist and director with the Missing Middle Initiative over at the University of Ottawa. Now, he looks at ways to revive the middle class for a stronger and more inclusive, clean economy here in Canada. I recently also spoke with him about what we're seeing nationally, and he starts off by explaining how the concept of a starter home has changed over the last 20 years.
So when I bought my first home, I was 27 years old in London, Ontario, and I bought a small but comfortable three-bedroom home. My parents in the late 1960s, they were in their early 20s and bought a small two-bedroom home. Nowadays, because of the price of housing, that's not happening in much of the country. That when young people are able to afford that home, particularly if they don't have family help, they're 33, 34 years old, and what they're buying is a small one-bedroom condo, which isn't necessarily a comfortable place to raise kids. So it's a much different environment than we had, and it doesn't really allow for the graduating into a forever home like we did back in the early 2000s and like my parents did in the 60s and 70s.
Yeah, I mean, in Winnipeg, it's always astronomically different. Even so, when I was 31, bought my first home in this city was 2005, and similar to you though, was $146,000. That house is now 2.5 times that. Same house. And we're considered to be the market where you can still afford a home. Why can't condos fill the void here in being that first rung on the ladder?
Well, they can be, but you're not building a kind of enough equity. That young people are doing that later, and we're not seeing the kind of appreciation in condos. So there was a time, I would say around 2010 in the GTA, where that actually worked. That a younger person could buy a condo, the price of that condo would go up 10, 12, 15% a year. Eventually, they, with that appreciation, they could sell the condo and use that for down payment on something larger. But that was never a sustainable model. The home prices couldn't keep going up 10, 12, 15% a year. So now we find ourselves in the situation where condo prices are flat, in many cases falling. You don't really have that pathway to build equity.
So obviously the impact on young people's lives means they might be looking for other things to build equity, but what does it mean for them in terms of the housing market? Is it going to return to a place where they can look at housing for equity, or where do you think it's heading?
Well, I certainly hope it's not headed back to where we were in 2010, because that was not a sustainable model. That I think we need to be building more homes. We need to get the cost of home building down. And, but home prices can go up over time. If they're going up 2, 3, 4% a year, kind of the same rate as wages and inflation, that allows for affordability. But, that experience that we had over the last 20 years, that experience that you were mentioning, of a home going up 2.5 times over 20 years is not sustainable. It seems to have ended, and let's hope it doesn't come back, because it's just not a workable model.
What's the impact on a young person's life of this situation and on their choices in their life?
Well, they're having to face a series of trade-offs that are far larger than what we had to face 20 or 25 years ago. That the biggest one being families and kids, that they are delaying having children. Many are choosing not to have children at all, even though that they would like to, simply because they can't find a place to live. And they're also not able to live close to job opportunities. So you have a whole generation of folks who've been priced out of the GTA, for example, and they're moving to smaller communities like a Tillsonburg or a Woodstock. They're having to face a choice where either they don't take that great job in Toronto, or if they do, they are commuting an hour and a half each way every day. It's not great for quality of life, and it's also not great for the environment to have all of these cars zooming down the highway, because we haven't created the conditions to allow people to live close to where they work.
All right. Well, I guess as a last question here, Mike, I mean, you outlined all of this. What do you think politicians might be thinking about to solve this? You already mentioned some of the building that needs to happen.
Absolutely. I think the first thing they need to do is get out of the mindset of that all homes are the same. That we can't just create a bunch of one-bedroom condos. There is a use for that, but we need family-sized homes. We need to tackle the taxes on construction. Here in Southern Ontario, in most municipalities, Development charges and similar taxes have gone up about 2,000% in the last 20 years. But the big thing we need to do is tackle land costs. That we have gotten very restrictive on how much, not just how much land is used, but how that land is used. We need to be able to create regulatory conditions that allow us to build 3-bedroom, missing middle type housing in existing neighborhoods. That would go a long way to keep prices reasonable and create opportunities for young families.
All right. Thanks a lot, Mike. Appreciate your time.
Well, thank you for having me.
So with all of that in mind, we once again find that Winnipeg is different. We are still one of the country's more affordable housing markets, as explained, at least comparatively speaking. Last summer, Statistics Canada reported that for the first time since 2004, Manitoba had experienced a quarterly net gain from interprovincial migration. So what does that mean? Well, it means that in the first 4 months of 2025, more people moved to Manitoba from another part of the country than moved away. Cody Bown is one of those new arrivals. He moved from Vancouver to Winnipeg last year with his partner and young son. Now, his partner's family is here, and that played a role in their decision. But they also wanted to start putting down roots somewhere more affordable than Vancouver.
Buying a house or even an apartment was so unattainable there. And with a small child, like putting down roots, and having a place for him to grow up that we're not getting having to bounce from, especially as he grows, was really important. So that triggered our move to Winnipeg.
He says the city seemed like a solid option. So they found a realtor and they started looking in Winnipeg. They knew it would be more affordable than Vancouver, but they were surprised at how competitive the market was here.
I didn't realize the market was going to be as hot as it was. We put offers in on 6 places before getting our place, and we were massively outbid every time. And, our realtor just kind of he'd shrug his shoulders and say, hey, it's a hot market. And I don't think either of us were fully expecting that.
Cody and his partner started house shopping while they were actually still in Vancouver. His in-laws would take them through houses over FaceTime. He says before they got here, they were 0 for 4 on offers made and accepted, and then 0 for 2 once they landed. And they weren't just getting outbid by a few $1,000s. This is part of our local market story as well. Places, he says, were selling way beyond the list price.
The most, I think, was $170,000 over asking. And I think the least was $64,000 over asking. And even then, we had a pretty modest budget, but to see some places go for $170,000, especially when it's offer onlys, basically, there's no communication. It's just, that was another part of the process that was really surprising to me was and this is just maybe first time home buyer, but they would say, okay, submit an offer. And then we do, and they come back to you and say, well, there's 7 other offers. Do you want to make an adjustment on yours? You don't know whether you're the high bid or not. So then you adjust, and then you learn that you were outbid by $170,000. It's like somebody went in there and said, okay, throw in $170,000, that part was crazy that, we were being outbid by that much by people who had that extra to throw at a house.
Cody says they quickly learned that would-be buyers were even choosing to waive conditions like a home inspection. They opted to pay for at least 3 inspections up front because it was a non-negotiable for them. Eventually, they did make an offer on a home for $200 over asking price, and theirs was the only one. The place wasn't perfect, but they had some room in their budget that allowed them to do some significant renovations since taking possession. But Cody says it was worth it.
So they would say, $100,000 over asking, no inspection, move-in date whenever, you just tell us. And we were surprised by that and not really willing to budge on our conditions.
Still, it's not an experience he's looking to have again anytime soon.
I hope I never have to do this again, truthfully. I hope I die in this house. Because it was such a pain in the butt to deal with that rejection. And then, because we found some really interesting houses, one house my mother-in-law's dad built. So she grew up in that house, and it would have been so cool to have it back in the family, a couple generations later and, raise our son in it. It was a beautiful house. It needed a little bit of work. And that one was 120,000 over asking. And we were at the max of our budget offering. So, we went like 60,000 over asking and it still went that far. And it was just like never stood a chance.
So if Cody experienced such tough competition, finding a home within the $500,000 to $600,000 range, we wondered whether or not it's the same for other first-time home buyers here. I checked back in with the Winnipeg Real Estate Board President Michael Fraze to get a better sense of whether starter homes are still a thing in our city.
We still have a healthy supply of starter homes. Now, the prices certainly have gone up, and it certainly is more difficult to buy than 20 years ago. That part is true. But unlike some of those other major markets where it's $1 million for that starter home because it's on a piece of land and it's going to be developed one day or whatever it might be in Toronto, Vancouver, et cetera, here, you can still get that home at a reasonable price. Our average sale price in Winnipeg is $450,000 for a residential detached, like a single family home. But that's average. There's things that are decent neighborhoods, a little bit smaller in size, that you can get even under $300,000 right now. So now again, that house might have been a lot cheaper 20 years ago, but it's still, again, compared nationally, we're still in a good spot, and the affordability is still our calling card here in Winnipeg.
And what is that house today? Like when you think starter home and are you showing 600 square feet with one bedroom, or two bedrooms, 1,000 square feet, or what's considered starter when you think about the market?
Certainly, sorry to interrupt.
No,
Most
no, no.
homes there's not a lot of one bedroom homes around. There's certainly some, but it's mainly two bedroom homes. And yeah, you can certainly get those still under $300,000. And this is the important thing for every buyer, right? It is, our market just isn't local, it's hyper local. It goes neighborhood by neighborhood. What side of the tracks, what side of the street you're on affects values. So, it's impossible to paint with a wide brush, but as you go into certain neighborhoods, and again, what's one neighborhood is great for one couple or a family or a young person might be different than the next person, right? So where you want to live really dictates how you live. So as you go neighborhood by neighborhood, though, there are neighborhoods with still smart starter homes. I'm thinking of one, Elmwood into East Elmwood. You can still get those, and to some person, maybe you want to live in Elmwood, maybe you don't, but bottom line is you can still buy a home there, a two-bedroom home, and maybe it's under 1,000 square feet for under $300,000.
Now you mentioned St. Boniface. I know that I'm just thinking about different neighborhoods, but St. Boniface in particular, like there's also a lot of infill. And if you see a small house that goes up, I mean, who are you competing with if you're a first time buyer? Because it seems to me a lot of those smaller homes can be snapped up by developers, and in some cases they split the lot.
Yes, that is true. So I mean, it's St. Boniface again. I was a resident there, and actually I'm an investor in St. Boniface, so I know it quite well. And that neighborhood specifically is really unique, right? It's such a great location, close to downtown, the university, the college, sorry, and the hospitals, etc. So what you have there is, and with the city's new zoning bylaws changes, but they're trying to allow, higher density builds on smaller lots. Certainly, it is a very attractive neighborhood for investors. So if you have maybe that smaller home in St. Boniface, that's now quote unquote a starter home. So you're definitely, right, that's going to be an attractive spot for a lot of first time buyers. But now with these new zoning regulation changes, perhaps, you're looking at an investor who may be able to build a duplex or a triplex on this, and now it becomes you're attracting more investors as well.
So that could be harder in the
density.
competitive
So,
part.
yeah, so it just increases competitiveness.
What about the condo aspect of things? Smaller home options, condos, are they still a viable option? And is the availability and the price point still considered starter in Winnipeg?
Yeah, absolutely. So condos, you certainly can get, one bedroom condos. You can get bachelor suites that are, lower on the, ticket price. The thing with condos is that, you do have condo fees, right? So that is the monthly fee that you pay for, shared common expenses. And again, depending on the building, some of those can get high. Some of them can be low, depending on the age of the building and the structure of their corporation. But it certainly is an alternative housing type that we've seen buyers get into, especially in the spring markets where single family homes is very competitive. There's often, and this is where I feel for the first time buyer, you can maybe find the right home that you love, that you want in a neighborhood you want to be in. But unfortunately, because of competition, you're in a bidding situation and you can't actually get it because somebody else outbids you. That's frustrating. And so often we see those people, they will get, they'll look at alternative housing types where maybe that competition isn't there, such as condos. It's generally speaking less competitive of a market. Or they'll look into other alternative housing types like row housing, duplexes, and they'll, the kids call it house hacking now, live in one side, rent out the other, or maybe they look into a granny suite. So there's more alternative options now for starter buyers, and which, that is a good thing.
What do you think might need to change to make first-time home purchases in our city even more accessible, even though, as you say, we're not necessarily following that national trend in your view?
Yeah, it's a tough challenge to say, magic wand and say, bing, this is going to change everything. Certainly, we've seen supply, like our inventory challenges, be at the forefront of a lot of political campaigns right now, especially the feds just launched Build Canada Homes, and they're going to be building, I think, 340 direct build homes in Winnipeg for affordable housing. So there are these initiatives that are, trying to unlock more supply. Just supply doesn't change overnight, right? It takes a long time to get these things through, developments pass, zoning regulations, all this stuff. It's a slow moving wheel. So, this inventory help isn't coming overnight. And so that's the big challenge there. On the demand side of things, there's been some, 30-year amortizations have come, which eases the monthly payments for first-time buyers. There's new first home savings account, which I encourage every Canadian to take advantage of.
So there's some initiatives there.
There's initiatives there to try to make
into.
it more affordable for buyers. Yeah.
Overall, what's your view, Michael, on is it still a good investment to think of a home as an investment in this city that you're going to be able to sort of go up that ladder or to flip it? I mean, obviously, you speak from a point of view where you have skin in the game. You're an investor and also you're a real estate agent. But I do wonder, when you think about the prices, is it still viable in the same way to see your house as something you could use as an asset?
Mm-hmm. So we always counsel our clients. Number one, you're buying a house first. So unless you're an investor, you're going for investment properties. If you're a home buyer, you're looking for a home first, right? So I would say a deal isn't a deal if you don't like the home in the neighborhood that you live in. So that's always a priority number one. It's like, you can steal how I got a great deal, but you're miserable in the house. I don't think that's a win. So you want to buy the right home for you, for your family, what's going to suit your family's needs and location that you love, and you're going to flourish. That's not priority number one. Secondly, as an investment, the good news is in Winnipeg, since 1977, our market has only gone down 3 or 4 times. The average rate of increase is 5%. 3% with adjusted for inflation. So we have a very stable market that way. We're not seeing these high volatility markets up 20%, then down 40%. We don't ride this wave. We have a nice kind of Goldilocks market, not too hot, not too cold. So from an investment side of things, it's a pretty safe market.
Well, that's it for today. I'm Marcy Marcuso. Hope you enjoyed the episode, whether you're looking for a home or not. I'll be back next week with another brand new episode of This is Manitoba.